What's up, guys? It's September 26th, 2024. Had a lot of legs to trade today. Had a down leg and then a pullback. Market cycle displayed itself again. Wow. Look at the daily chart. I changed the 45-minute chart to the ETH. I just like it better. Read the price action more. Looks like I'm doing this after hours, so we have a leg one, pullback leg two. This is crazy price action to look at. We are channeling higher. Really bad follow through. We had a pull bar, leg one, pull back leg two, pull back leg three. Now I'm just laughing because I just like reading price action. It's starting to click for me a little bit. So we'll see if this is showing to get its own leg two, or do we have to get another opposite bar. Gonna be really focused on micro channels. I know I've been switching up a lot, but I've been just drilling like every 100 trades. What do I need to change? What do I need to change? What do I need to change? And I'm still trading sim, just so everyone knows. What I need to change right now is rather than trying to make the most amount of money, take the highest probability trade. And the highest probability trade is second legs. And I've actually been taking it and it feels a lot more comfortable rolling with the market. So I hope you guys can bear with me and you understand these shifts. If not, I apologize. I know I'm still going to talk about the market cycle. We're not changing that. I'm just changing trade. So 2 weeks ago, I'd say I'm gonna take 716 here because it's a breakout. Today I say I'll short the high of 20, and I did short the high of 20 for a leg two move of this. I had to get out around 24. This was more probable than this. So that's what I'm trying to get at. Big gap up, bar one, 5 minute bar closing on its low. This is a micro channel on the 100-second chart. Bar two, bull body, but it has a tail, bad for the bulls. You want to see strong bull closes, and then we start to go sideways into bar seven. Bar seven tests the high of bar two. It goes past it by one tick and reverses lower. This is a micro channel as well on another time frame. So we have a micro channel here, leg two, and then bears get their leg two. So leg one, pull back, leg two, pull back, leg three into the EMA. You can even say leg one, pull back, leg two, pull back, leg three, and the market really did go range bound from here. Failed breakout at the range lows and reversed higher. Where are we? 13, 14. I think bulls saw this as a 50% pullback. So the high of bar one. So C13 closed above. So I think bulls were excited to buy that. It did look pretty nice, but there was a lot of selling pressure. I was hesitant. Bar 15 makes 14, 15 a 2 bar reversal, 16, 17, 18. Follow through from that 2 bar reversal and breaking out below the EMA. Market cycle resets. Bears got their leg one. We have a pullback, leg two, pullback, leg three. And then this whole price structure gets its own leg one, leg two. Leg one, pullback, leg two. This price structure gets its own leg one, leg two, leg one, pullback, leg two, pullback, leg three. Climactic price action. The leg three pullback is deeper, so that's something to take note of. This was leg one, pullback, leg two for the bulls, so I'm getting carried away. So we had this leg one, got its leg two, and it creates a wedge bottom. Bulls see this. We're trading above the higher time frame at EMA, and then they rally. Leg one, pullback, leg two. This becomes a second leg trap. Bar 30 is testing the low of 15, and it sells off for 31, gets its reversal down, creating a double top, creating a first gap bar above the EMA. 1, 2, 3, 4, 5, 6, 7. We have more than 10 bars below the EMA, but they're not all bear bars, so this is more range bound price action. Bears that missed this first leg want to get short. Bulls are trapped out here, buy more, and they get out here, creating enough pressure for the second leg down. Leg one, pull back, leg two. Many ways to count legs. And then we have into the market cycle. So we go into the market cycle. So what is the market cycle? The market cycle is breakout, channel, range, and the legs kind of wrap into themselves. So what do I mean by that? Here's the start of the breakout. Leg one. Leg one, pull back, leg two. But here's the high of the range. So before we knew this was the high of the range, so this was the bear trend, and the high of the range already got put in, but we didn't know it was the high of the range. So the market kind of started wrapping in. So 30 became the high of the range. So after they get this leg one, pull back leg two, failed breakout below the higher time frame EMA. 8:15, 10:20. Okay, so we're looking on the 45-minute chart. We're looking like right around here for the failed breakout. This would be the low of the failed breakout, and then it rallies here to the. So I think this would be the high. So this is the low, and then around here is the high. Wait a minute. Okay. Oh, that's the 15-minute. 15-minute leg one, pull back leg two, pull back leg three, reversal leg one, pull back leg two, sideways. Market cycle shows itself all over the place. So failed breakout, reverses, leg one, pull back leg two, pull back leg three. Legs are getting smaller. Leg one, pull back leg two, pull back leg three. Leg one, pull back leg two, pull back leg three. Wedge bottom, climactic wedge bottom. Failed breakout, higher time frame EMA. It reverses. They put 47, 48, 49, become a rally. They have a gap here, trapping limit order bears that sold the high, that had limit orders above the high of 46. The bears that got out, the bears that sold this high never got a chance to get out, and the market broke out. 54 bears that sold here. It was market order bears because this gapped up with a 55. There's a small gap there. The low of 54 is 94.50. The low of here is 95.25. So there was a 3-tick gap from here to here. But do you see it this close here, but it opened there? It's a tick gap. So breakout 54, first opposite bar. 53 is the first trend line break in a strong rally. So here's a rally. We're breaking above the EMA. 1, 2, 3, 4, 5, 6. 6 bull bars. 53 breaks the low. 54 is a higher low, opposite bar. Bulls by the close, and we rally, creating a second leg trap with climactic price action. Becomes a tight trading range. I bought 62. I got trapped, and I just got out for 1 point on above 69. Let's do these gaps, and then I want to show you guys the overnight price action because I'm staring at it on another chart, and looks like there could be a leg two. Looks like it could be climactic. I'll turn off the numbers for the picture screenshot. Big gap up, no follow through. No gap, lots of overlap, no gap. Okay, we got a bear gap. But it gets closed right away. Closes with here. T-bar reversal, no gap. Okay, we get a breakout gap. That's good for us. Pull back. Excuse me. Another sell-off. There's a small gap here, but it's a weak gap. It's a bear bar, bull bar, bar. We want to see bear, bear, bear. So this is a better gap because it was started with a bear bar, ended with a bear bar. Pull back, bad second leg, doesn't make a new low. It turns into a wedge, and then we get a rally. Well, there's a gap here, but it's a weak bull gap because it starts with a bear bar. Reverses. Again, another weak gap. It's a bull bar, bull bar. Sells off. I don't see any gaps here. I see a climactic gap here. That gets closed, and then that gets also reversed with its own gap. It's a bullish gap. No gaps. And then we have another gap, but it becomes climactic and this gap closes. So as of right now, there is a bull gap open. But we're also sideways and we have a bear gap open right here. So it was a bear trend, market cycle, right? Breakout. Opposite bar equals channel, leg one, leg two, and then we go range bound. Failed breakout. Reversal is a form of a breakout. So market cycle resets. Breaks out leg one, leg two, second leg trap. You can even say this is the third leg. So many ways to count. Market cycle is great. I like it. Let me just check this. I want you guys to see the overnight price action real quick. Yeah, so I was looking at this overnight price action. Leg one, pull, like epic pen is crashing. Leg two, I think this was shot. This broke out, but it had a weak close. But I thought it was strong enough for sellers, and I was looking like one pull back. This pen is lagging. Like one pull back, like two sellers at the EMA, and then the market gets more. Bears start to sell more, and I look at these three bars. Unfortunately, they're not the same bars, but there is a micro gap put in here, so we know bulls are trapped. And now we'll see if this is strong enough to get a second leg. I think it is strong enough to get a second leg. And a second leg, remember, just like today's price action. So like a second leg doesn't have to be symmetrical. A second leg could just be one bar in its favor and then it reverses. See, if this prints a bear bar and the next bar is a bull bar, maybe that was the second leg. What is this? Oh. So yeah, this second leg was not symmetrical. This second leg was this second leg. Let me grab this line. Okay, so this second leg was a little more symmetrical. This second leg to that second leg was a little more symmetrical. Anyways, hope you guys have a good one. Hope you guys are studying and these things are working for you. If not, let me know. If you learned something, share the show. If you didn't, don't share the show. Have a good one, guys. I'll talk to you later. I'm probably not going to trade tomorrow, but I'll post a review Friday, Saturday. We'll see what happens. Have a good one, guys. I'll talk to you later. Thank you for your support.